Welcome to the Big Four Accounting Firms podcast, brought to you by thebigfouraccountingfirms.com. Check out our blog and subscribe to our podcast for career advice, recruiting secrets, and the latest Big Four news. Hope you enjoy the show.
In today's podcast, I wanted to discuss a couple of topics. The first one being that PwC has to pay $625 million to the FDIC because of the lawsuit between FDIC and PwC. As you remember, in December of 2017, a judge found that PwC should be responsible and liable for the FDIC having to pay out deposit holders of Colonial Bank. And back in December, we knew that PwC was going to be liable, but we didn't know the exact amount that PwC would have to pay. And now the judgment has come in, and that judgment is $625 million. And this is a huge number. PwC was estimating that it would only be about $300 million. And the FDIC actually paid way more than this. They paid billions of dollars to deposit holders of Colonial Bank. But PwC was lucky enough, and they only had to pay $625 million of that. And essentially what happened is that PwC was held to be negligent in this case. They didn't do what they should have done. They didn't audit Colonial Bank correctly. They didn't apply enough standards, and they didn't hold the Colonial Bank up to the standards that they should have. And this is really huge. A judge isn't going to make PwC pay $600 million for nothing. What is shown here is that PwC did not really do their job as the auditor. Investors were trusting PwC to do their job, and when they signed on the financials, they wanted to trust that those financials were good. And with PwC's name on there, they did trust that. And it's really the case with the FDIC, right? Because the FDIC would not have to pay deposit holders if the auditors had warned people ahead of time and deposit holders were able to get their deposits out. So there's a number of things that happened, and people relied on the financials to where this company collapsed without anybody knowing about it. And it wasn't even just PwC that was involved in this, right? Like, what made this worse is that the chairman of PwC, he came out and said that auditors should be responsible for detecting fraud. So that was something that was really unfavorable to PwC. And then also Deloitte, they were involved in Colonial Bank as well as a previous auditor. And they didn't even really litigate this. They just settled for $100 million in their lawsuit. So there's a lot of things that happened here that are really unfavorable to PwC and to auditors that showed that they were really liable for this, and they really didn't do their job in this case, and that investors and taxpayers were relying on them to say the financial statements were right or wrong. And they were wrong, and PwC didn't tell anybody. So because of that, two companies went under, Colonial Bank and Taylor Bean, and also the FDIC had to pay out deposit holders. And the FDIC is a part of the federal government of the United States. So it's not just the FDIC that has to pay out deposit holders of Colonial Bank. It's also the taxpayers of the United States. So PwC not doing their job correctly does impact more than just rich people and deposit holders of one bank. It impacts taxpayers of the United States for billions of dollars. So that's sort of the background of the latest news regarding PwC and this huge lawsuit. I wanted to discuss the implications of this. The implications of this is that auditors really are going to be held to a higher standard. They can't be negligent in their work. They have to pay attention. They can't just sign rep letters, and they can't just test a population. They have to actually dig into the information, and they actually have to do analytics and analyze it and ask questions and get a little bit behind the scenes. They can't just high level everything. And with technology and standardized templates nowadays, it's a little bit easier to do that. But going forward, there's a lot more risk now. This lawsuit almost reached $1 billion, and nobody has $1 billion lying around to pay out. PwC will likely not have to pay out this entire amount because they have insurance policies. But even if they don't have to pay out the entire amount, their insurance policy premiums will go up. There's going to be huge implications of this, and there's a lot more risk, and there's a lot more financial risk to the big four accounting firms. PwC paid out $600 million. Deloitte paid over $100 million. So there's a lot of liability out there now. There's going to be a higher standard for auditors because there is risk. They used to just be able to escape out of these things by saying there's no obligation to detect fraud. But with this case, there's a little bit more liability out there for them. There's a lot more risk for them. So if you're going into the audit field, you have to keep this in mind. I'm not asking you to hold an engagement on your back, but you have to make sure that you feel right on the engagement you're on. If something's fishy is going on and you raise the issue and nobody cares, then you need to get off that engagement, because you don't want on your resume that you worked on one of these engagements for a number of years and just went under. It won't necessarily impact you to the point to where you can't get a job, but people are just going to be a little bit hesitant because you're involved in one of these audits, and they'll think you don't speak up when the time is right. And one person can't make a difference on one of these engagements, but that's why I'm saying if you get involved in one of these fishy engagements and the numbers aren't tying out, you can't reconcile cash, things like that, then you need to get off that engagement and move on to something else, or move to a different firm to get away from an engagement like that, because these things are not good. And these type of environments, these types of engagements, there's telltale signs everywhere. People are ignoring things. I've been on engagements like these as well. You raise issues, you bring them up, people are ignoring them, people are telling you to look the other way, people are telling you not worry, it's not your problem. You don't want to be involved in those types of engagements anyway. Everything on this engagement wasn't sunshine and rainbows. It was probably a very difficult engagement for a number of years. It's probably a very difficult engagement for a number of years, and people were just pretending like everything was okay because there's millions of dollars coming in. So in summary, the implications are the Big Four have a lot more risk now, and they're not making as much as audits from they used to. So it'll be interesting to see how they address this and approach this in the future. And it's also make sure to protect yourself in your own career by not staying on an engagement that is on engagements like these. The next story I wanted to cover was about Deloitte's U.S. CEO, Kathy Engelbert. News has come out that she has not been nominated for a second term as CEO of Deloitte U.S. And this is very unusual, as most CEOs, they just get to continue the job unless something goes wrong or they step down. Now, Kathy has not stepped down, and Deloitte has done really well over the past couple of years. During Kathy's term, Deloitte has been the number one professional services firm. So it's kind of unusual that she has not been nominated for a second term as Deloitte U.S. CEO. And the way the Deloitte U.S. CEO term works is it's for 4 years, and you can serve a maximum of 2 terms, which ends up being 8 years. And so she has not been nominated for that second term, which is kind of unusual. There hasn't been anything said about why that's happening. So it'll be interesting to see what news comes out about why she's not going to be nominated, or whether they correct that, because she was the first female CEO of a Big Four accounting firm. It's kind of interesting during this time of Me Too movement and diversity that they choose to do this. If they do not nominate her, and instead it ends up being a white male that gets her place, I think there's going to be a lot of controversy, and people are going to want answers. And it's also going to be interesting to see what happens to her after that happens, whether she'll move into the global board position or whether she leaves Deloitte for some reason. And the other interesting thing here is Deloitte has not had too many huge U.S. scandals to where they should push her out. For example, they haven't had an issue like KPMG had in South Africa, a regional issue like that. There hasn't been many huge lawsuits with her. And even if there were, Deloitte's growth has been huge and exponential, and they're number one in the world in professional services. So why would you want to disrupt that? Why would you want to potentially blemish your brand in the United States as a Big Four accounting firm? There has to be something going on here, something very controversial that hasn't come out yet. Otherwise, politically, Deloitte isn't really thinking this through, and there might be some bureaucratic infighting that's going on that's potentially can cause the firm harm. So it'll be very interesting to see what comes out of this. So that's just another key news story that I wanted to make you aware of. And just wanted to thank everybody for listening today, and make sure to check out the links in the show notes.
If you need help and guidance through your Big Four recruiting process, make sure to check out our links to our books and courses in the show notes below. For additional Big Four career insights, tips, and tactics, visit our Patreon page, whereas for as little as $1, you could start receiving unique guides and checklists to help you throughout your career. Support us by not only donating to our Patreon page, but also by subscribing to our podcast on iTunes, Google Play, Stitcher, or your favorite podcast player today.